For the first time in 8 years, we could be getting a new leader at the Federal Reserve. And one of the top contenders is a guy named Kevin Warsh. His potential appointment? It's a really big deal. So today, we're going to break down who he is, dive into some of the strange superstitions the market has about this job, and figure out what his leadership could actually mean for your money. So here's what we're going to cover. We'll start off with some of those quirky market superstitions. They're more fun than you think. Then we'll get to know the man himself, Kevin Warsh, and his incredibly powerful network. After that, we'll dig right into his policy ideas and wrap it all up by looking at what a Warsh-led Fed could mean for the future of the entire economy. All right, let's kick things off with something a little unusual. We're talking about the superstitions, the jinxes, that seem to follow every single new chair of the Federal Reserve.
Okay, I know this sounds a little crazy, but there's a long-running theory on Wall Street that you can predict monetary policy just by looking at how tall the Fed chair is. So, is there anything to this?
Well, take a look at this. The correlation is pretty wild, isn't it? You have Paul Volcker, the tallest on the list by far, and he oversaw average interest rates of around 11%. Then, as the chairs got shorter, Greenspan, Bernanke, Yellen, the rates just kept dropping. And then came Jerome Powell, who's a bit taller, and guess what? Rates started climbing again.
So this brings us right to Kevin Warsh. At 186 centimeters, he'd be the second tallest chair up here, right behind the legendary inflation slayer Paul Volcker. Now, if this quirky theory holds any water at all, it could point to higher interest rates down the road. Of course, it's just a superstition, for now.
And it's not just about height either. New chairs almost always face what Wall Street calls a test, where the markets basically challenge them right out of the gate. And then there's the so-called new chair curse, this idea that a huge crisis almost always hits early in their term. Think Black Monday for Greenspan or the 2008 crash for Bernanke. It seems like a tough start just comes with the territory.
All right, jinxes aside, let's get to know the man himself, Kevin Warsh. Because his background, it gives us some very real clues about where the Fed might be headed.
I mean, just look at this career path. It's a masterclass in influence. He went from the Ivy League straight to Morgan Stanley, then to the White House. He was a Fed governor during the 2008 meltdown, and then he famously resigned to protest the Fed's quantitative easing policy. That was a huge statement. And from there, he landed with the investing legend Stanley Druckenmiller.
But to really understand Warsh's potential influence, you have to look beyond his resume. You have to look at his network. And let me tell you, it's a powerful web of connections at the absolute highest levels of finance and politics.
You see, his personal and professional worlds are just completely intertwined. Through his marriage into the Estee Lauder family, he has a direct line to the White House through his father-in-law. His board seats at companies like UPS give him a real-time pulse on the economy. And of course, his mentorship under Stanley Druckenmiller puts him right at the heart of Wall Street's inner circle.
And what this all adds up to is something you could call the Druckenmiller School, basically taking over U.S. economic policy. Think about it. You'd have the mentor, Druckenmiller, with his protege, Warsh, running the Fed, and Scott Bessent, the Treasury Secretary. That kind of ideological alignment across the three most powerful economic jobs, it's just unprecedented. So, what does this all actually mean for policy? This is the key question for every investor out there. And Warsh's philosophy, well, it presents a fascinating contradiction. On one hand, he wants to cut interest rates. He argues that new AI tech will boost productivity and keep inflation low all on its own. That's obviously great for markets. But on the other hand, he is a huge critic of the Fed's massive balance sheet, all those assets it bought to support the economy, and he wants to shrink it big time. And taking away that support system, that would be a major negative for markets.
And this chart shows you just how enormous that support system really is. Before 2008, the Fed's balance sheet was less than $1 trillion. After the financial crisis and the pandemic, it just exploded to $9 trillion. This has been a kind of hidden hand propping up markets for over a decade. Warsh wants to take that hand away, which creates this classic one step forward, one step back dilemma for investors.
So let's pull all these threads together. When you combine the man, his network, and his policies, you start to see that we are on the verge of a completely new era for the Federal Reserve. The days of the Fed clashing with the White House could be totally over. With Warsh at the Fed and his allies at the Treasury, we're likely heading into a period of unprecedented cooperation between all three, all pushing for the exact same goals. You know, this isn't the first time we've seen something like this. Back in the 1940s, the Fed and the Treasury worked hand in glove to keep interest rates low. Why?
to help America manage its massive war debt and to fuel that incredible post-war boom. We could be seeing a modern version of that exact same playbook about to unfold.
Let's give this a name. Let's call it policy synergy, the tight alignment of all the economic levers of power. Now, this could make government policy way more powerful and predictable, but it comes with a major risk, and it challenges a core principle of modern economics.
And that leads us to the single most important question in all of this. With this new level of coordination, is the century-old tradition of an independent Federal Reserve, an institution specifically designed to be free from political pressure, is that tradition finally coming to an end? That's the billion-dollar question hanging over this entire new era.